Good morning, good morning, good morning. Yeah, we just a little bit of a late start here, but let's get this show on the road. Good morning, James. Good morning, Sheila. UL, good morning. All right, guys. So what we got going on here is the market is in sync on the long side, and we're getting a little bit of price action, fast price action coming up right here. So we're seeing an opening range that is fairly wide. I mean, it's a big one. It's from 867 all the way down to 604. Then we have the mids of the opening range that is worthy of us looking at, and this is it right here. It's fast. Okay, so as long as we continue to trade under that range, we are looking for, rallies are shortable. The market is in sync on the short. It was in sync on the short side. Now probably shifted. So we gotta take a quick look here. We have 680 that it needs to hold for the longs, and 840 to hold for the shorts. It's a wide range, so we're dealing with that wide momentum. And now the market is in sync on the short side. We're looking for rallies to short into this market with a target of 688. Safe, good morning. I mean, we're getting a bit of, let's take a quick look here. So the market is in sync on the short side. The bigger picture here is we broke that channel to the upside, that big channel to the upside. And now we have channel number one in this rotation, right? All right. So we want to see what they do here, because ultimately, if the market gets back in sync on the short side, we are looking for a continuation trade that will break the 700 into the 650 and the 600. And we have enough momentum early on to where if that break happens, we will see persistent price action. Testing Harmon zone number 2. A little bit on the wild side here. We're getting that's a good sign right there. Market is back in sync on the short side. Let's go. Yeah, you're getting that push. Good morning, good morning. Let them retest it here. I mean, we gotta understand that the market is fast. So. Good morning, Becca. Good morning, good morning, good morning. We got a captain set up short on the on the 50 NT wrinkle. We need one more push. If they do that, that would be great. We should be seeing an over average push lower into the 700s. Really? That is crazy, bro. Wow. That is a chop. That's crazy, huh? Yeah, it's gonna go to 688. 688 is our target. I mean, that's a 6 pound captain set up long. I mean, good for them. I mean, they're defending that 700 like somebody slapped their mama. Yeah, that's a big deal here. That's a big deal. I mean, you don't see too many of those really, of them doing that number with a wick. That's a shift. All right. Market's in sync on the long side with a target of 813. We'll reevaluate if we break 750. Target is hit. Next target is 838.75. Pullbacks are buyable. The chop is real here. The chop is real. All right, well, that's what they want to do. Serious volatility coming through. What I'm gonna do, what is this, 47? 47. Okay, so I have an order at 49.75 and an order at 64. We'll see if we can get ourselves into a push higher. I mean, we should get a little bit of a retracement here. Let's see how crazy they want to be with it. Here it comes. The buy stop should be what is this thing? Cannot see my quotes here. I think there's a little bit of delay. Okay, so 300. I'm gonna exit this trade. It's profitable, but it's just there's a delay in the quotes here. I got too many things going on. Let me clean things up. Okay, 48. So we do have the opening range built up right now. They reject harmony zone number 2 a little bit more, like below the 50s. That could be a good spot for us to kind of jump in. So they're defending the captain setup that they built. Here we go. I'll just give it a shot right here. And we should flush. Like we need a flush below 40. I'm not going to add to this one. Like I need 30 out of this thing. Target number 2. You could do it. You could do it. Well, you cannot, right? Yeah, there's a little bit of a delay on the quotes here. Okay. All right, that's the stop. So I'm gonna pause a little bit here. So we made a little bit of money on the first one. We got stopped out on the second one. My quotes are not. Let me just clean a couple of things up here. ES, how is ES behaving? We have that huge captain set up short, a push lower. We have resistance coming up at 72. So that's a market that is waiting for a conclusion. A break under 53 will lead to a retest of Globex at 77.34, and that picks up momentum. And the market in NQ is just literally dancing around the edge of the channel. The expectation was to see 700 break, and they're just defending it multiple times. They broke it, bought it, broke it, bought it, or I mean, got close and bought it, and got close, and they're buying it again. So they're just 700. They like it. Fast and Furious price action. We got target of 813. We're trading in the middle of the opening range. So the opening range is right here. Trading in the middle of it is a choppy zone. Now the market is putting a captain setup short on the 50 into Rinko. So that's something that will put defensive mode to price action. Switch trade. So there is an opportunity for a buy. $90. And 90 to the target up here. $56. Let's see what they do if they come up to come down to 56. I mean, there's just where's the big idea? I mean, what's the big idea here? You have the 6 pound captain setup. We have the retest of it. So that is the floor to the longs, and you have stop runs above 818 that will take you to that high. So they're rotating in this in anticipation of that big move, and they're trying to make sure that this level holds. Good morning, Marty. Good morning, buddy. Chop, chop, chop. Keep chopping. Testing Harmony Zone number 2. Patience is a trade. Now the market is in sync on the short side. Okay, that's fine. That's actually a good thing. All right, so let me go to 47 right here. Let me go to the 40s, and we'll see if we can get a push. Target is 688. Target is hit. Next target is 663. I don't know if we're gonna, these orders need to be adjusted. I'm a little bit on the aggressive side with this one, but 22, yeah, 23. Okay. No, no retracement, 638. Now they're breaking it. I mean, they just danced around that channel enough to bust through it. And now it, people are just getting run over. So they'll probably go back up there and try to retest. Not 97. Good, good, good. Target coming up at 688. We have Globex as a target, a big one, by the way, which is 488.75. Yeah, there's a bit of a structure that they just built. The captain set up switch trade on the 20. They built it around at 60. So let's see if we can get a push all the way up to the 80s. The next 45 minutes. All right, guys. Let's see here. They're chopping it up. Here we go. Man, I mean this thing is just my quotes are not right here. I'm just gonna just flatten that. Okay, I mean that actually kind of worked. I flatted that trade just due to the quotes not kind of catching up, and I'm gonna wait till the market slows down a little bit. But that is a test of harmony zone number one, and we're pushing toward 687, our target. Let's go, let's go. It's pushing. It's pushing. You know where it's pushing to? They're just attracted to that Globex at 488. Okay, give me a second here. I'll take a look. What's your trading hours that you have on your data, and how? 2407. Okay. Testing harmony zone number 2. That's what it is. See, it's back to 514. It's 514. I just had a different template on it, and that kind of threw the numbers off. All right, so that is a market that is resisting, making a lower high and rejecting harmony zone number 2 resistance, and we're starting to get into harmony zone number 1 break. So they'll probably bounce it right back up into, yeah. Let's take a quick look here. We need, excuse me, we need another rejection here. Yeah, we need another rejection. It's it's a wide consolidation. I mean, look at these bastards. Okay, so yeah, if they go down below 40 again, that's a captain setup short. And we need to get aggressive with that actual entry, to be honest with you. Target is 580, 589 and a quarter against that 680. Captain set up short on the 100. This is a big deal. Let's look at a rally and see where would we enter. I mean, that's one spot right here. If they give it to us, aggressive spot would be here. And we'll see. They may not give it to us. I mean, you're already getting one candle closure. Our target is 589. Rallies are shortable on a swing trade basis with that big target. And this should be above average trade when it comes to motion. Man. Yeah, they're gonna flush this thing. Good. Oh man, I was trying to get more. 540, 600. Let's go. I need 89. Don't be greedy, George. Don't be greedy. Okay. I took the 09. I think it's going to go down to target very quickly, but about 600 bucks on that trade on one contract, 30 points, and it's gonna flush. That's fine. I don't have to be a pig. Here we go. Good Lord. I need my contract back. Excellent, Becca. $1,400 on 10 trades, on 10 PAs. You stop breathing there. Good for you. That's awesome. With micros? How many micros did you trade? That's 1,400 bucks per account. Yeah. I mean, 50 and 70 producing. Excellent, excellent. Yes, each account, 1,400 bucks a piece, 10 accounts. Let's go. You get a captain setup on the 100 like that, man. I mean, that's just gold right there. And I knew we're going to have a better than average move into a target. It's just a matter of patience to let it work out. What? Where are we? Yeah, railroad, and I mean, yeah, on the 50, you got a railroad right there. That's what got me into the trade, anyway. All right, good trade. We're positive. We're up about 600 bucks. Let's keep going. Market is in sync on the short side. Let's look for a rally to short into this market. Potential captain setup. That's a captain setup long. They're gonna rotate back up there in a meaningful way. So look for um, a lot. Oh, yeah, here we go. Rally. That's a captain setup long. See, they did the captain setup short. Now they're doing the long version of it on the flip side. So you're getting yeah. You're gonna flip down this market back up and start running. So what is that establishes? If that sticks, it's going to be a captain. Excuse me. It's going to be channel numero dos, two, right here. So that's establishing channel number 2 of this rotation, and they can go to 700 and retest potentially the 750 if they show a bit of strength, and then you got yourself a break under 563 if the market here we go. Yep. All right, let them rock and roll. All right, pull back, pull back. Okay, here we go. That was a good one. Target is hit. Next target is 714. Target coming up, guys. 739. Let's rock and roll. Let's go. So I know Becca is doing good. How's Sheila? How is Marty? How's YouTube? Marty is up 1100. People are making money. Let's go. Target's hit. 764 is the next target. Futures trader, good morning. Good morning, buddy. Target coming up, 789. Target coming up, 789. All right, guys. Friday, huh? Let's see what we got going on here. Okay. All right. I mean, here we go. I mean, we're at the top end of that little segment. So, I mean, a break above, below 690, which is a whole number. Here we go, which they just did it. That will set the stage for rallies being shortable for a push towards 650. So the market is kind of doing something here. So let them rally back up and we'll take a shot at it. I mean, where would we take a shot at it at? I mean, 22s maybe. Here we go, 22s and 35s. Oh, come on, we need a fill here. We cannot be jacking around. Need to push lower here towards 700. Just that's too tight of a price, to be honest with you. Let's try this again. Here we go. $25 points. Yeah, my stop was way too tight, but I mean, I just jumped right back in. I'm gonna take 1,200 bucks out of this, 1,300 bucks out of that trade. Let's go. Not bad at all. Not bad at all. Okay. God dang it. Yeah, that's another rotation. That was a good one. I mean, needed to kind of jump in on that one. Why is it not? Hey, Steven. How are you, buddy? Target is 639. Rallies are shortable on a swing trade basis with a target of 639 and a quarter. That's excellent, excellent. All right. We're still looking for rallies as shortable. We need one more push lower. I mean, they're just kind of playing around with this range. They need to close under 90. Otherwise, we're going to retest harmony zone number 2. And they put a captain setup short too on the 50 and ran that over. So if you're looking at the 100, you got 2 switch trades in a row and a push, and they're countering that push. So that's kind of trappy in the way they're moving here. Hitting harmony zone number 2 and see how they react to it. Gonna take a shot at it here. What is this? It's a lot of consolidation here. Here we go. It should be coming in fast. Wow. On the other side. Here we go. Here we go. You just break the 700 for goodness sake. I think once you do that solid, you're going to get a nice move. Break 700. We got a big trade going. I'm going to just go ahead and take a small stop. We were looking for a break under 700, and then a break into 90, then a break into the target of 639. Market right here is just rotating at the top end of that range. So we'll give it a little bit more time. Ultimately, if they break the 700 and come back to retest it and hold, we have a good shot at 660. And that's that one we're looking for, right? The key is 690. If we break 690, we'll start getting out of this little choppy range. Oh, I know, James. You gotta take your stops. That's what keeps you in business. Yeah, I mean, I had a couple of small stops here, and then I had this big trade for 1,300. I mean, you you look at some of these. Yeah, we had another nice one here. Um, one stop that you don't take is he's gonna be the one that really runs against you. So I'll take annoying any day of the week. It's a Friday too, so you just gotta motion into 764. 968. That's excellent, man. That's excellent. Target is 789 coming up. 789 coming up. Oh, that's excellent, man. That's even better. Those are the days when you know you got it. From being down to being up. Oh yeah. Super true, man. Very true. Very true. All right, we got market moving towards 789 and a quarter. Pullbacks are viable on a swing trade basis, and they are just moving price action. Well, happy Friday, everybody. Let's get it. Maybe one good solid trade and can it be done? You got 30 trades? Well, okay. How many contracts do you trade? All right, let's see if we can make this one happen. We're looking for the 70s. Double switch trade right here would be very nice. Yep. Here we go. We have 70s, then we're looking for 80s and 90s. Uh, I'll take 8 points. Not a lot of momentum going on here, right? 1 and 2 micros. Oh, okay. I got you. I got you. I understand. Yeah, I mean, micros are a lot better for managing risk and emotions, to be honest with you. But I mean, it all depends on what you're trying to accomplish. I trade both. Some of the PAs I have with the Apex, I do micros, 50,000 accounts. They handle micros a lot better. Personal account, I do minis. Let's take a look. I don't think it recovered, but let's see. So that's where it's at. Yeah, I did 38 trades at 28%. Yeah, it was struggling. So it took out. So, yeah, it was a, a down day. Well, we'll see. I mean, we'll keep. I mean, that's gonna keep running. Hopefully, we'll get some headway here as the day continues and keep going higher. As long as like one day is not taking a week worth of work. That's important to me. 4, 5, 6, 7. So in four, I mean that's an outlier day. So I mean I would understand that. So you're looking at that was a tough day, but the market that system recovered. Then that's a tough day that system did not recover, and then you got a flat day so far. Yeah, if we get into the 40s, 40% win rate, 40 to 50, then we'll, you know, this will boom back up. All right, market is continuing the upward movement. Target is 814. That we had, I had a bunch of trades where it got very, very close to target, and it didn't hit it, and came back and stopped me. So that's kind of the difference there. Let's see here, and see this clustering. Then into the night, that whole structure was not necessarily volatile. Yep, yeah, fixed target, fixed stops. Because ultimately, what you're trying to do is you're trying to pr- produce protect expectancy, right? So if you try and protect expectancy, I mean, how much? Like if you look at your big trades, you're making 700. You when you are given, you're taking a stop. You are taking average winner, average. Here we go. Yeah. See that? So average loser is consistent, and average winner needs to be consistent. It is consistent, really. It's $700. So if you look at the trades, you're making 700 every time it works, and you're giving up 450 when it doesn't. So if you go and at this stage of the game, yeah, let me just add EMA. Give me a second. Not the EMA, but here we go. So you come in here and you say to yourself, okay, the trades that didn't work, right? Look at that. That's literally 10 points away or closer to, like, you do this and you come in there and you see the majority of them gave you 10 points. So it stops you for 455, right? So if I go in here and change the rules and say, hey, listen, stop me for 455 and take 200 every single time. So I have 112 trades, right? And out of the 100 and trades, I have 25 of them that never hit that threshold. So out of the 25, you lost 450, right? There you go. 25, 450. So that's 11 grand. Then you have 87. You made 200, right? So you made 17 grand. So the difference across the board is 6 grand. So that's how much money you're making. Okay? But now if you came in and says, leave it alone, you're up 8,700. Yep. So you're up a lot more money by taking a full stop and a full target versus trying to go for, it goes in your favor 10, 20 points, and you go and you break even with 10 and you pocket 10. Because over a big sample of trades, you're shortchanging yourself if you just stick to the target and the stop. Exactly. So nobody wants to see it like a day like that, but you always want to see days like this, right? But that's just kind of part of a system, because you're not going to look at this. You're going to look at weeks and weeks. So I ran this like replay for a few months, 3 months actually, and it was significantly profitable over the 3 months. But it had days like that. So a trader can, like, come in here and say, okay, well, maybe that's too much for me. I like this, but I don't like that. Then you start micro. You trade micro. So these amounts are relevant to your account, is manageable. I mean, look at this move, right? Holy crap. Do I think bots will take manual trading? You're gonna answer that question. I'll tell you how. Is a bot What is a bot good at, and what is a human being good at? A bot is very good at data processing and taking logic to execution flawlessly. What is a human very good at? Thinking creatively and coming up with an ideas that a bot will never imagine, because that's not what a bot does. So what happens if you combine both of them together? You do the thinking and let the bot execute flawlessly your thinking. Do you think institutions that make all this money are what do they do? They have rooms full of highly paid quants that come with math problems to extract value out of the market, and then they develop it into algorithms, and the algorithms are running. That's the 70-80% of the volume is coming from that. So as a trader, I have to adjust to that by doing two things: have a big portion of what I do automated, and a big, when I say automated, like it could be just a signal that gives me a signal, so the signal is automated, and then I can take it manually. And a portion of what I do also completely automated, because you can always have to kind of keep your thinking cap on and keep, so you have to be interacting with the market. But the trading is all about math and efficiency, precision and efficiency. So you got to ask yourself, are you precise? Are you efficient? And do you have a statistical edge? And how can you capture the statistical edge? You could capture it by having rule-based system that is very precise and consistent, and you execute on it, and you can give portions of that to an algo. and that's the thank you by the way, but that's I mean that is the game, right? Oh, sorry guys. I mean that is the game. If everybody can make, if everybody can make uh, a very profitable algo and a bot and an AI, then like that there's no inefficiency for that bot to make money. So obviously not everybody's going to be good at that process. And the key is to be good at that process. And the way you become good at it is at quantifying. Yeah, I think a part of it is you got to ask a lot of questions. That's the start. And not assume anything. Ask a lot of questions, don't assume a lot of things. And let the data drive your conclusions. Like the beauty with AI and bot development right now, like in the past, you would have had to be a quant, an analytical, quantitative analyst with big degrees, well funded, and you sit there and you work out math problems about price action, movement, all that stuff. Then you have institutions putting billions of dollars in infrastructure to try to get the ideas that these analysts are coming with into algorithm that takes a small piece out of price action. So that's how it used to be. Now you have a lot of the tools that the institutions are been using in your hand. Yeah, yeah. I mean, I'll tell you something funny because I was working with that yesterday. So back to where is this thing? Yeah, where's the audit? Yep. All right. So that's collecting data, right? Then we're coming in here, and it's giving me, where is this thing? Let's see. Like I can't tell you how many people I talk to. Everybody wants a bot. They wants to automate. They wants to do all this stuff. Events, and references. Okay, here we go. All right. So that's the data that this is accumulating. So what it does, it accumulates this data and it punches it into this, and it has fields upon fields upon fields. Okay. So now I have the unenviable task of verifying, and this is just like about half an hour worth of data. I have not run it all day long. If I run it all day long, I'm gonna be smoked. Like this thing is gonna be like how many fields do I have here? Let me see. That's probably not much. Whatever. It's a lot. Well, about 250, which is for half an hour worth of work. Anyway, the point is, I got all this data, and I have to go manually verify that this data is being calculated accurately, right? And that's just a half an hour. Otherwise, the integrity of the data that I have is in question, right? Then any conclusions I drive from a data that's corrupted or is not accurate is faulty. Okay, so now I have a big problem on my hand. Is like, how do I humanly come in here and actually verify this data? It's almost impossible. So my second solution was I'll go in there and spot check. But that is also faulty, because what happened if I happen to be spot checking the ones that work and left the ones that don't work off? Now, if I run this, because I've ran it before for like a whole day, I have 80,000 to 100 lines that I have to take that process through. Okay. Well, you have to verify the data, right? So you have to go through every line in every category and make sure that the actual numbers are accurate. Otherwise, this data collection is inaccurate, and then you're making conclusions based on it. That cannot work. All right. So I thought about that. I was like, man, that's just not going to work. Like, there's absolutely no way that I'm going to be able to, because you have to look at it from the perspective of data collection, data integrity, and time. So I was like, okay, well, I got to come up with a solution to this problem, because it's just, you know. So I decided to create a bot that checks this bot and verify this data, and then gives me a conclusion if it's passing or failing. Then I'll take that report, which has a lot less information at that point, and verify it. So now within this bot, there's two bots. One actually collects the data, and the second one checks on the other bot to make sure they're doing their job correctly. Then it gives me columns of verification that tells me it's verified and passed, or there is an issue, and it runs a report. And it tells me, for example, I collected data on moving averages, and the moving average calculation is within 0.10 zeros to the 1 accurate. Then I know that that is pass, pass, pass. See, that's the audit portion of it. I don't know if you could see that, but pass. Yeah, here we go. That's an audit of geometry, for example. So what is that audit of geometry? It's actually audit of, does the system capture the candles accurately? And is there any instance in which this line, the bot misread the candle? So if it misreads the candle, it's going to give me a fail. I could come in there and see, okay, why did it fail? And that's just one model. You have audit of expected reversals. This is, okay, so there's what is audit of the zone, audit of the moving averages, audit of the spread. Here we go. Okay, so EMA audit, pass. Geometry, pass. Session audit status, pass. You know, and on and on and on and on and on. So now I can start a process where I'm collecting years worth of data, and I have a great deal of confidence that it went through a rigorous process of audit that tells me that data is within 0.x fraction accurate. And then I could go in there and just look at one or two and know that things are accurate. So that's just one process of, the process that, because okay, so if you're trying to build a bot, what are you doing? The first thing that you're doing is you have to come up with an idea, right? The idea has to have some merits, like okay, it makes sense. Then the second phase, like okay, this harmony waves. You have harmony waves, you have harmony zones. So the harmony zones are an idea, right? Based on a retracement within a trend, is a bit deeper into the move. So now I'm coming in there and I'm asking the question. That's my idea. I'm collecting data. What do I do with the data? I take it through an analyzer. So you have to make the analyzer. Then once you analyze the data, you take it through machine learning, because you want the algorithm to learn your what you the results from the analyzer, and constantly look in the market and adjust to it. You don't want it to be too static. Like market change strategy needs to learn what's working and adapt. So the process is an idea, data collection, analyzer, machine learning. And you just go through that process and you come up with an idea that you feel confident in. And you start executing, start seeing the results, and you go through that process. That's how institutions work. Yeah, a bot checking a bot is it was funny when I was doing this. I was like, man, I got an employee checking on another employee. I'll probably have to build another bot to check on those two, just to make sure they're not lazy and screwing up. Well, that's the next. Well, I'm in the I'll make it happen. But the process where I'm at is I'm almost done with the data collection segment of that, and I'll be going into the analyzer phase. So what am I gonna analyze? I'm gonna analyze multiple things. I'm gonna analyze speed. I am gonna analyze motion. I'm gonna be asking questions like this. When I get a harmony wave, I'm not gonna assume it's the signal. I'm gonna assume I'm gonna collect data what happens after it. I think that's the mistake we all make, is we assume just because two lines cross and you have a harmony wave, for example, that is a signal. The signal is not that. The signal is actually what happens after it. How does the price organize itself? What pattern that happens here in this place right here, and I want to go 10,000 times in this exact same spot. What exactly happens here that gives me high probability of a continuation? Then I would have to ask that question through an analyzer then implement a machine learning mechanism to study this exact spot and come up with conclusions based on math and data. Like, for example, is speed here different? Like when the market is moving and is making a move, is the order flow here acting in a certain way with speed, and the formations of the candles are structured in a very specific way to where this is an entry. So that's the kind of questions I gotta ask. Then I'm gonna the same quality questions I'll come in here and ask. Okay, like, here we go. I'll give you an example. I mean, I know we're talking a lot, but like, okay, so this auto system came in there and picked up this order and sold it off here. So we made $700 on that trade, right? So I have all these levels down here. Which level would have been better? Would have 0 been better? 23.6 better? 50% is better? 61 or 100 better? So at every level, I'm asking the analyzer to tell me what happens around that exact level the moment the price hits that level. Do you have more momentum on the downside? Or do you have more order flow on the downside? Should we have waited till the order flow flips back up before we get in? Then I'll take it through that machine learning process to fine tune the decision making process exactly at that spot. So that's anyway. It's a process, man. It is a process. I mean, yeah, I may get to the bottom at the end of that process and find out that this idea, for example, is not the best idea. But I would have built a process from inception to conclusion that I can test any other idea based on it and based on the data collection that I bring in. So I'm not just testing this one or a scalper or anything. I'm just like, you create the infrastructure for testing of any idea. Because ultimately, to be honest with you, for example, I really want to be, I mean, that's okay, so you have a harmony wave. This is a harmony wave. Within a harmony wave, and when the market is in sync, what's the probability of me getting in here within this body of movement and capture a small piece and do it over and over and over and over? That's really what I'd like to see as a conclusion, because you see this on a daily basis, man. It just, you go through a lot of this noise, right? Where the market just, up and down, up and down, up and down. And usually, I mean, look at this. That's momentum. That's momentum. So the question is, how do you separate a market that's congested and not moving versus one that's moving with momentum that gives you the probability of flipping, getting in and getting out for a piece, but it's a very, very consistent piece. And I think the answer to that question is going to lie in understanding energy expansion and motion and speed. If through a process I can detect expansion of order flow and that there is speed in the tape and that speed is directional, then you will cut off a piece of price action and say, okay, that piece of price action, I can literally, within that flow of that river, take a cup of water and drink. And every day I come through that piece of water, I can always, get my cup and drink out of it. But you see so much price action. You're like, oh, okay, we're getting in here. You end up getting, into a piece that is just congested or choppy, and that's the one that you're trying to filter out. Or, for example, you're looking for a continuation and you come in here buying for a move, and then the price action just gets you out just long enough before it moves back up. So you're better off kind of coming into this piece and detect that piece and take a small piece of it versus trying to look at a pullback and take it. Anyway, the market is out of sync here. We're testing harmony zone number 1. It's interesting that we came into it and ran back up. I mean, they put on a captain setup long and failed it into that target. And now you're going into a bigger one. So how long is taking? It takes a long time, man. I've been trading since 2010. Part of the 2010 till now is developing the Harmony trading system. That's the one that you're looking at. Then the automation of a lot of it. I've been working on different versions of it for years, but be honest with you, that the speed in which I'm moving on a lot of this stuff with data collection and all the way to machine learning, having AI is tremendously helped the speed of that. It really did, because it just gave me tools. All right, sorry about that. No, it's just basically what I was trying to say is just it gives me the AI gave me tools that the tools were not available to us really. It was more available to big institutions with deep pockets. Now some of these tools are available to you, and all you have to do, well, not all you have to do, but one of the things that you have to do is just know how to use them and spend the time and the effort and the mind, the mental energy to really, work the problems out. Yeah, so with that last trade that we had, that ended up, putting today in the positive on that algo. So that's good. We'll see how the day will end. So at 42%, we get anywhere closer to 50% will be decent here. Yeah, I mean that's the thing. I mean you could take multiple stops, then you have one or two full target ones, and just boom, you're positive. It's about 36 to 40% is where that like the cutoff. Like if you are basically every out of every 10, 40% work, you're doing very, very well. If you're running at 1 to 3, like if you have you're risking 10 points and making 30 points, then you could actually get away with a lot more. And that's kind of basically what I'm trying to get to is, can I accomplish that percentage with 50%? Like, can I get risk 10 points and get 30 points and do it at 50% or higher? And I think the answer has to lie in not indicators, pure price action. Because the answer is out there. 11:04. All right, guys. So let's see here. Sheila, Maury. Sorry, guys. I I don't know. Sometimes we get on a tangent talking about this automation stuff like that, but it's extremely interesting to me. I think that's the future for all of us ultimately, and I want to be part of that future. And I think I'm gonna call it a day. I mean, positive day. We'll take it and kind of move on. And tomorrow, which is Monday, will be another day. We'll do this again. You guys take care.